What's up everyone, it's Brandon. What is the dividend yield and what is the dividend payout when looking at dividend stocks? In this video, I'll explain the difference between the two and then teach you how to calculate the dividend yield yourself using basic examples. In addition, I'll show you an actual dividend stock to help exemplify these fundamental concepts. If you find the video helpful, please subscribe to this channel and ring the notification bell to be notified of future uploads. It helps my channel more than you know, and I genuinely appreciate the support. Now let's get started. Okay, so before I can answer the question about what a dividend yield is versus what a dividend payout is, we first must understand what exactly a dividend is. Dividends are cash payments that are made to shareholders by a company as a portion of its earnings. Let's break this down a little bit. So dividends are basically paid out of the company's profits. So when a company operates quarter to quarter and it earns its net income, the board of directors sits down and decides annually how much it's going to pay out of those profits to shareholders for each share that they own. The cash payments are made to shareholders either quarterly or monthly. Normally, dividends are paid out quarterly, but there are stocks that pay out monthly, such as Realty Income, ticker symbol O if you want to look up Realty Income and do research on that stock. And then the third thing to understand about dividends is that they're calculated based on the number of shares that the shareholder owns. If the shareholder owns one share of the company, they earn the amount of the dividend. If they hold 100 shares of the company, you take the amount of the dividend, multiply the 100 shares, and that's what the shareholder is paid. Okay, so now that we know what a dividend is, let's talk about the actual dividend payout. Now, the title of this video is Dividend Yield versus Dividend Payout. However, in order to understand the dividend yield, we first need to understand the dividend payout. So what is the dividend payout? The dividend payout is the amount of a company's profits per share that is paid to shareholders annually. So as an example, we have a company, XYZ company, who isn't actually a real company, but we're going to use this as a model. And XYZ company pays a dividend annually of $1. And we call this the dividend payout. When we say dividend payout, we usually refer to the annual amount that's paid to shareholders. Okay, so what this means is that the investor receives $1 for every share of XYZ company that they own. And if they own 2 shares of XYZ company, they would earn $2 annually for holding the 2 shares. Okay, great. So now we know what the dividend payout is. Let's talk about the dividend yield, which is going to involve a little bit of math and some extra understanding. So what is the dividend yield? The dividend yield is the percentage of a company's share price paid to shareholders annually. And the key word here is percentage of the company's share price, whereas the dividend payout is actually the dollar amount. Okay, so we know what the dividend yield is, but how do we calculate it? So going back to our pretend XYZ company example, we're going to assume that the current stock price is $50 and that XYZ company is paying out $1 as a dividend annually. So what does this mean for the dividend yield? What is the dividend yield? Well, the math is pretty simple. You take $1, which is the dividend payout, and divide it by the stock price. And if you do $1 divided by $50, you end up with 0.02. If you want to be fancy and shift the decimal point so that you have a percentage value, you can just multiply the 0.02 by 100 and you have the dividend yield of 2%. Let's look at another example. Okay, so now XYZ company has a stock price that increased to $100. This is great, but their dividend payout is still only $1 because dividend companies typically only change their dividend payouts annually. They will usually increase just once a year. So we're going to use the same math. You take $1 for the dividend payout, divide by 100, and that brings us to 0.01. Again, we'll convert to a percentage value for a dividend yield of 1%. Okay, now I'm going to teach you a little rule that you can use to help you understand how much you're going to get paid in dividends based on the amount of money that you invest. So if the dividend yield is 1% and the key value here is 1, then you will be paid $1 for every $100 that you have invested. If the dividend yield is a 2% dividend yield, then you know that you're going to be paid $2 for every $100 that you invest. And the same thing, if the dividend yield is 3%, you're going to be paid $3 for every $100 that you invest. Okay, now I'm going to share a few little interesting facts about the dividend yield, and this can help you in your own investing journey. So basically, our XYZ company has a stock price of $50, which is down from our previous example of $100. What does this mean though? If you look at the dividend yield, you can see that it's 2%, and the dividend yield is actually up. So the rule here is simple. As the stock price decreases, the dividend yield increases. This is basically the reason why dividend investors get so excited when there are stock market corrections and when stock prices drop. You've probably heard the term where people say when a stock price drops, it's on sale because it's cheaper. Well, when a dividend investor says that the stock is on sale, they're also saying, hey, the stock is on sale, but also I'm getting a much higher dividend yield. So let's look at one more slide here. XYZ company stock price skyrockets to $200. So the reverse is true. If the stock price increases, the dividend yield will decrease. So it's great because yes, you're making more capital gains off of the stock price, but if you're buying the stock, you're not going to be as profitable with your dividend yields because the dividend yield is lower. So just remember these two rules. As the stock price decreases, the dividend yield will increase, and then the reverse, when the stock price increases, the dividend yield will actually decrease. As promised, we're going to look at a real-world dividend stock. In this example, we're looking at Johnson & Johnson, ticker symbol J&J. We're going to look at three values: the annual payout, the dividend yield, and the dividend amount. So we'll start by looking at the annual payout. Johnson & Johnson has a dividend payout of $4.52. This is the dividend payout from the earlier slides. If you were to purchase one share of Johnson & Johnson every year, Johnson & Johnson would pay you $4.52. Now let's move over to the dividend yield, which is at 2.54%. If you remember from the earlier slides, to calculate this, you take the annual payout, you would divide by the current share price, and in this case, we end up with 2.54%. So Johnson & Johnson's dividend yield is 2.54%. And then lastly, I want to look at the amount, or the dividend amount. So if you remember, dividend stocks are going to typically pay out dividends on a quarterly basis. So in this case, Johnson & Johnson pays $1.13 every quarter to its shareholders. And if you were to multiply that by 4, since there's 4 quarters in the year, you would come out with the annual payout amount of $4.52. Well, that's it for this video. Don't forget to like and subscribe to this channel for more dividend growth investing and personal finance videos. Thanks again for watching, and I'll see you next time.